And then the reversion cap rate that we're using is 6.25. Using is 6.25. What are assets trading here? What, low fives?
Yeah, 5 and even under 5, depending on where it is.
We'll get into that in a little bit. And going back to the reversion cap rate, we are using a 6.25 reversion cap rate. I've kind of gone through this a lot of times, but it's still good, worth repeating. Took me a long time to finally grasp this concept, but this number that we plug in here at 6.25 is one of the biggest factors in coming with all these projections. This number right here is the assumption of what kind of market we're going to sell in, say 5 years from now. We want to assume that, when you're being conservative, you want to assume that you're selling it in a worse market. So we're going to expand the reversion cap rate higher. So 6.25 is what we're using. And that is how we, if we put in 6.25, like how we are, that's how we're getting the projected 102% return in 5 years. Now, the question is like, well, what if you guys are less conservative and don't expand your reversion cap rate as much? Well, if we went to 5.5% reversion cap rate, we would be putting this deal out at 158% return in 5 years, which would look awesome, but we like to overpromise, underdeliver. We'd probably raise a lot of money and fill up this deal really quickly. But
yeah, no, that's a good education point for people who if they are looking at other deals by other operators. That's an easy change to make that really makes the returns go one way or the other, as you can see here. So if you ever see something that looks too good to be true in that range, may dig a little deeper and ask what their assumed reversion cap rate is that they're using for the deal.
Right. And the 6.25, Kyle and I kind of go back and forth several days deciding on this number, plus or minus a quarter point to half a point, what we're going to use. If this is again a more of a class B type of asset in a good area, A minus area, so that's why I use 6.25. But say it was more of a class C 1960s, 1970s build, we probably would have used like a 6.5% reversion cap. So you can't just compare the reversion cap rates for two deals because the assets might be different, the locations might be different, the geographic locations might be different. I think we've used, like, for Huntsville, we've used 6.25 also.
We've used 6.25 to 6.5, and even on some of our earlier deals, we use 7. Probably a little bit too conservative.
But the thought there was, Houston is a little bit more major market. If you compare that with your cap rates out in like Los Angeles or San Francisco, which is in the 2s and 3s, that's kind of where we come up with these educated guesses. And if the cap rates stay the same that it is today at 5.25, that means this deal is looking like it's going to be 180% return in 5 years. But let's keep expectations low because life is hard enough.